Welcome to 2026. Let's find out what's going on in real estate as we start the new year. I am Justin Miller with the Chung Miller Group. At the Chung Miller Group, we help people build wealth through real estate. That includes buying and selling real estate, both as primary residences, vacation or second homes, investment properties. Please reach out to us if you have real estate questions. Here in the Las Vegas Valley, I'd love to be able to talk with you and see what we can do to actually help you. Okay, so let's go ahead and set the backdrop here. So we've just started 2026. That means we have data for all of the year of 2025. It is January 7th as I record this, and so we have the complete or approximately complete multiple listing service data for December. Okay, so that means I'm going to look at the December data. Now, I will just caution you really quickly. Usually in the January updates, I try to give you an encapsulation of the prior year. So what happened over the last year in real estate. Because of time constraints that I have on my own schedule right now, as well as a lot of activity that's taking place this week, and a lack of certainty about certain things, some things that will be transpiring about the end of this month, I'm going to hold off for the year in review until we get to the February 2026 video, okay? That means this video is going to be pretty short, but I do want to give you the data for what happened in the market in December. It's pretty much in line with what the expectations had been that I had set for you as we were looking at the December update, which was the year through November, what might happen in December. So let's go ahead and check in on those numbers. Again, a short update video, and then we'll have a much more extensive February update that will have the year in review information. Okay, so first thing, prices. Now, I had suggested last month in the market update that even though we had seen a significant bump in prices in November, that may or may not hold in December, just because December is generally slower in terms of transaction volume. And that means that there are fewer participants in the market, which means each participant could shift prices up or down. And so we often, not always, but often see a little bit of weakness in pricing in December vis-a-vis the rest of a particular year. So is that what actually happened in 2025? Yes, absolutely. And so we saw prices coming down across the board for closed sales transactions in the Las Vegas Valley. So single family homes, 460,000. Now that's down 15,000, but remember that was a big bump up that we saw in November. Where are we actually down to? Well, we're down 15,000 or 3.3% from November, but we're actually flat year over year. In other words, we ended 2024 at a median sale price of 460 in the Las Vegas Valley, and we ended 2025 at that same 460 median sale price in the Las Vegas Valley. Now, that's single family houses, and I had been saying throughout the year, we've not really been seeing prices going higher, nor have we been seeing prices going lower. We've been maintaining a fairly flat housing pricing in the Las Vegas Valley throughout 2025. And so that's actually where we ended the year. We ended the year literally flat on the approximately 80% of the market that is single family houses. Now, I do want to comment just really quickly. You may see things in the press that say, hey, we've dropped from 488, which had been the previous highest price ever in November. And it's nonsensical information, right? The Las Vegas Realtors, the local MLS, puts out information which is not clean. It's literally, as a statistician would say, it's dirty information. It includes things that are not real resales in the valley. They're not in the marketplace in the same way. And so when we strip that out, we had at the end of November, we were at 475. We came down to 460. And again, 460, we finished the year flat. Okay, so what about the other submarkets? What about condos and townhomes? Well, condos, We finished the year at $220,800. That's down, it's down $10,200. It's down 3.7% month over month. So a little bit bigger drop than we saw with the 3.3% drop on single family houses, but this is down 8.7% year over year. Now, that's a significant annual drop that we experienced in condos. And that's true, right? I don't want to sugarcoat that. That's a significant drop. But remember, the condo market is small. It's not something that we should take to the bank as being indicative of what's going on in the overall market. Well, what about townhomes? Similar kind of thing. We're down $20,300 to $317,700 on townhomes, down 2.4% month over month. I think that's wrong. The numbers at the bottom will correct the percentage decrease there. That should be a bigger percentage decrease. But year over year, we're down 6.9% on townhomes. So that means townhome prices year over year down 6.9%. That's a substantial drop, but that's actually about the kind of increase that we would normally expect to see in a regular year. So we've kind of given back, if you will. We're back at 2023 pricing on townhomes. We eliminated all of 2024's gains. And in 2025, we're ending back where we kind of started 2023. We'll have more detailed analysis about that again in the year on review video, which will be the February update. Okay, but that means for approximately 80% of the market, flat. For condos and townhomes, the two multifamily segments, those are down year over year. Okay, now pricing insight. This is kind of interesting. The price per foot. Remember, not a valid way to price a property, but it is interesting in that it gives us some additional insight into what was going on in the market. If price per foot falls more quickly or relatively to median sale price, then we have an understanding that the lower portion, the smaller houses or the older houses or the less high-end houses of the market were transacting more quickly and maybe better than at the top end of the market. And conversely, if price per foot goes higher than the median sale price, we know that it's generally the top end of the market that's actually outperforming. Well, here we actually saw price per foot decrease across all market segments. Okay, so that's interesting. That kind of confirms what's going on with regard to sale price. But I do want to note, I've not had time to parcel this out yet, and I will in the next month's video, where I think what we may actually be seeing is more transactions taking place at the lower quarter of the market and more transactions taking place sort of at the 60 to 90% level of the market. Maybe not the super high end, and slower transactions taking place in the middle of the market. I'm not sure, but anecdotally, that's what it feels like it's taking place. I'm just not seeing it in these larger statistics. So I need to parcel the data more completely to be able to give you further insight onto that. Okay, so that's for pricing down across the board. So that's not fantastic, but again, for 80% of the market, single family homes, flat year on year. And by the way, I do want to point out, this is in an interest rate environment, which has been approximately flat year over year. We're actually down a little bit. In fact, in December, we saw interest rates come down about 10 basis points from about 6.25 to about 6.15, and then move back up to about 6.25. Here in January right now, we actually are at 6.25 after having popped at the end of December, beginning of this month, up to about 6.32%. So interest rates are fluctuating in a narrow band. They're not really going down. and I don't expect they're going to be. Check out the forecast video, the 2026 forecast video, for more interest rate information, as well as my projections about what's going to be happening for sales transaction and for pricing. Okay, so what about sales transactions for December of 2025? Now, this is interesting, right? And this is actually counter-seasonal. We normally see transaction volume falling significantly in December, right? It's because people are not looking for houses in late November. They're not looking for houses through the holiday season. And so they're not closing on houses during that time. So seasonally, generally speaking, we see a drop in November, a significant drop in December in terms of volume of activity, which is why I had suggested the prices might come down, just because of that drop in volume of activity. Now, having said that, in 2025, we saw something a little bit different. Single-family resale closed transactions. Right? These are measures of demand, remember. Demand we measure by closed transactions. We measure supply by inventory. So this is a measure of demand. Buyers are out there wanting to buy as we see demand or number of closed transactions go higher. So this is interesting and encouraging information. Closed sales transactions, 1,596 for single-family homes. That's up 221 from November's very weak number. It's up 16.1%. Now, it's up also 1.3% year over year, right? So last year, we saw the seasonal drop that we normally would in December. This year, we saw something different in December. We saw an increase in volume, and that actually pulled us above one of the very few months of 2025 where we actually pulled above the level of 2024. So we're up 1.3% year over year. I'll talk more about that in just a minute so you understand clearly what year over year means. So what about condos? Was this true only of that 80% of the market that's single family homes? Or what about also with condos and then townhomes? Condos, we saw 217 closed sales. That's up 57 or 35.6% month over month. That's a really big increase in the number of closed transactions, condo transactions in this instance, during any particular month, but during December relative to the prior month. We are still down 9.2% relative to December of 2024. So that's something interesting to note, right? We've actually seen transaction volume in condos under significant pressure throughout 2025. And that continued in December, but we're up really strongly from November. We're down substantially 9.2%, not horribly, but substantially from December of 2024. Townhomes, 192, that's up 41. Or 27.2% over what we saw in November for townhomes. So really impressive gain there as well. And we're up 22.3% year over year. So December of 2024, right, we're up 22.3% over that, right? So in other words, for closed transaction volume, for demand in the market, we saw really good numbers in the month of December. So this is really interesting. Now, I do want to comment on two things. One, pending numbers, right? So these are contracts that came into existence during the month of December. They should close in January if everything works properly with them. Well, we saw pending contracts for single-family homes down over the prior month, which again, we do expect seasonally. We saw them up for condos and townhomes over the prior month, which again is counter-seasonal, right? So that suggests that January might be a pretty solid month for condos and townhomes. I'm not saying it's going to be bad for single-family homes, but we do see this divergence there between the multifamily submarkets and single-family homes. The other comment that I want to make about closed transactions. We saw closed transactions in 2025 at the lowest level we've seen in a generation, right? We were lower than we saw in 2023. We were lower than we saw in 2024. We're scraping the bottom here for a number of transactions that are taking place in the Las Vegas Valley. Now, remember, closed transactions are an indication of demand, but it's an indication of demand that's actually being fulfilled within the marketplace. So you cannot just simply analyze this as buyers have been non-existent during the course of 2025. This is buyers for the properties that are actually existing in the marketplace have not been enticed to make transactions, to engage in transactions at high levels during 2025. Although we do see actually maybe something a little bit different in December. And by the way, we're going to go and look at inventory now, right? We're going to go and look at the supply numbers, right? Because the supply tells us something about what's actually available that those buyers can look at and possibly put offers on. So if supply is too low, it doesn't matter how much demand there is in the marketplace, we're not going to see transactions. We're not going to see closed transactions because there's not enough for the buyers to buy, right? So we want supply to exist, and we don't want supply to be so tiny that it's actually curtailing the number of transactions. We heard lots of people talk about enormous supply in the market during the course of 2025, and I've been showing you data that suggests actually 40 to 50% of that quote supply is fake. It's not real. It's priced just ludicrously. It doesn't make any sense. So these big supply numbers have actually not been so big. We've also seen even those headline supply numbers coming down throughout the year relative to where we'd been in the prior year. Well, let's see what happened in December. Okay, so inventory contracted across all submarkets. We saw single family inventory down to 6,226. That's down 1,289, or down 17.2% month over month from what we had in November. That's a huge drop. I'm going to go on and do the month over month for condos and townhomes, and then I'm going to look at the annual numbers. Okay, so a little bit different than the way that I normally track this. Condos, we had inventory, standing inventory at the end of December of 1,372 condos. That's down 271, or 16.5% decline month over month. And townhomes, we had 1,009 condos sitting in inventory at the end of December. That's down 17.4%. Month over month. Now, those are big declines. Now, we normally expect to see inventory come out of the market during the course of December, right? For the same reason that we usually find closed transactions going out of the market, decreasing during the month of December. It's because of seasonal patterns. But these are actually bigger drops than we've seen seasonally over either of the prior 2 years. Okay, so kind of interesting. These are actually large drops in the marketplace, bigger decreases in inventory than we would expect to see with normal seasonal patterns, or even the kind of unusual seasonal patterns we'd seen in the very low transaction volume year of 2023 and the very low transaction volume year of 2024. Now, let's look at the annual numbers. The annual numbers, we are up on inventory for single-family homes, 6.9% year over year, right? From December of 2024 through December of 2025. Not cumulatively, but end of 2024, end of 2025. We have more inventory going into 2026 by 6.9% relative to what we had going into 2025. Okay, interesting. Not a huge increase, right, Interesting. We have inventory also up 6.9% year over year, end of 24 to end of 25 for condos. Again, not a huge increase in inventory. Townhomes up a whole lot. We're up 31.0%. It's from the end of 2024 through the end of 2025. Now, the thing to note, in all three of those submarkets, year over year growth in inventory has fallen for 9 months in a row, right? So we had been up significantly on inventory in the middle of the year, and we've been cutting that inventory growth, that sequential inventory growth, every single month now for 9 months. So that's inventory coming out of the market, not inventory going into the market. We're not growing inventory. I just showed you we're cutting inventory on a month over month basis, more rapid than seasonal patterns. And we're cutting that growth in annual gain in inventory really substantially. So something to note here is we could be going into an environment where we're even more inventory constrained as we move into 2026 than what we had been over the whole of 2025. And remember, these are the headline numbers. These include whatever that percentage is of fake inventory relative to real inventory. In November, that was 40% of that inventory was fake and 60% of that inventory was real. Okay, so if we're actually 6,226 houses sitting in headline inventory, but 40% of that is fake, that's 2,900 approximately fewer houses. That means we're sitting here with 3,300 homes sitting in inventory. That's less than a third of the market that we should normally be seeing, right? So inventory is actually really, really tight. That's the takeaway on this. Now, the other thing I want to point out, new listings plummeted in all submarkets in December. Now, we normally see that as normal seasonal pattern. People tend not to list during the holidays. They may list in January, in February. We start getting that bigger build in March and April and May on inventory. But we actually saw a bigger than normal seasonal decrease in new listings. Now, what was driving that? What was driving some prices down? What was driving transaction volume a bit higher? What was driving inventory lower at a more rapid than normal seasonal pace? We'll go back again and look at my 2026 market forecast video where I talk about the issues that have been really impacting on the market with uncertainty, right? Where we had government shutdown, we had all these other things that act as real headwinds in the marketplace because they increase uncertainty and they make it harder for people to make significant commitments, including the commitment to list one's home for sale. Okay, so let me also give you the back on market numbers, something I've been looking at since I think October of 2020. These continue to be really high and really problematic. Back on market, remember, are houses that had gone into contract, gone into escrow. So a buyer and a seller met, negotiated, wrote a contract, and then the contract falls out and that house goes back into the market, right? So these are failures of contracts, but they're undercounts because they don't capture those sellers that decided, I'm not even going to bother with this anymore. I'm not selling. I'm going to rent, or I'm going to keep it. I'm not going to move, whatever it is. Right. So these are undercounts on failures, but back on market, the best number that we can get, 509 single family homes fell out of contract, went back into the market in December. And that was while transaction volume closed was actually increasing. Right? So we had committed buyers out there, but something was causing some significant percentage, 24.2% of buyers to leave those contracts, or maybe sometimes it was a seller pushing the buyer out, or maybe it was a seller leaving the contract. There's a variety of reasons. Make sure you're talking to your real estate agent about what those reasons are to protect yourself. If you're thinking about buying, if you're thinking about selling, you want to make sure you know why contracts are failing at really high levels, right? High volume levels, so that you can be protected. Okay, condos, 84 back on market. That's 27.9% of condos went back into the market. Townhomes, 75 failed contracts or back on market, 28.1%. Again, really high numbers. We've been sitting between about 25 and 33% most months for 6 years now. We'll get into more details about what happened in 2025 when we do the market update video for February of 2026. But I wanted to get this information out to you so that you've got it, so you understand what's actually going on. And by the way, with regard to uncertainty, end of January, the government may close again. So just kind of keep that in mind is, something that might be on your bingo card. What was not on my bingo card, right, in all the discussions of the forecast for 2026 was invasion of Venezuela, right? I didn't have that. So that was not uncertainty that I had been planning for or planning around for 2026. Well, it came to pass anyhow, right? There's a lot of uncertainty in this environment, and that could be your friend as long as your name isn't Maduro. It could be problematic to you, but it actually makes it more interesting in the market if you have an agent who is comfortable working through uncertainty and ambiguity. So reach out. I am happy to help you through those kinds of issues, because that's actually where I find the market to be most interesting, just based on my background. I like playing in uncertain markets because they give people who are willing to make commitments a lot of leverage that you don't necessarily otherwise have. Okay, so please smash the like button, hit the notification bell, and subscribe. Please share these videos with your friends, your neighbors, your colleagues, your family members, anyone you think might benefit from having real quality information. I'll see you in the next video, which will be the February update, which will have the year in review for 2025. And again, please go and watch the 2026 market forecast video that I posted in December so that you have a good understanding of what I'm saying is going to be happening in 2026. My forecasts have been really accurate since I've been creating forecast videos, and they would be really helpful to you as a consumer. So I'll see you in the next video. Thanks. Bye.